Hey, what's up? Hey, I just want to record a quick video to talk a little bit about the market and what's going on. As you might have noticed, there's a bit of an inventory shortage right now. Here in Dayton area, oftentimes houses are getting 5 or 10 offers per property. This is April 2023 when I'm recording this, although these problems have been going on for a while now, and we're probably not going to see any major changes anytime soon. And so I want to talk about a possible solution for this problem. So whether you're a person thinking about getting a mortgage or you're a realtor looking to help your borrowers, this video might just be what you're looking for. So today we're talking about renovation loans and specifically VA renovation loans. A lot of people don't realize you can actually get a VA loan renovation, VA renovation loan, which is a VA loan with a renovation component. In other words, you're financing improvements into the loan as you make that purchase. And there are not very many companies that even offer VA renovation loans. And during COVID, it got even worse. And they are starting to come back. And as a broker with 110 different lenders, believe it or not, out of the 110 lenders I have, only 2 of them even offer this program. A company called Plaza and another company called EPM. And what's really interesting is that a lot of the companies sell their loans to Plaza anyway. So it's actually Plaza and EPM are kind of it, really, on the back end. And luckily, EPM, one of our companies, gave me a PowerPoint deck with some slides that I can use to showcase their program. And then as I go through this presentation today, there are some differences between the way they roll and the way Plaza rolls. And I'll point those out as well as we go along. The VA doesn't have any major guidelines on the VA renovation loan. A lot of times it's some very general guidance, and lenders have kind of created their own guidance around it, but most of them have very, very similar guidance on how it works. And let's get started. So hit the right button. We go. So about VA renovation mortgages. VA renovation mortgages enable veterans to either purchase or refinance a home and include minor renovation, non-structural repairs. With EPM specifically, they cannot exceed $100,000 for the repairs. That's one difference between them and Plaza, is that Plaza limits it at 50, although they've told me they can go slightly higher. And certainly, depending on your project, I will have to use that to determine where to send the loan to. Now, minimum credit scores. So they will go up to down to a 580 score, but keep in mind that if it's under a 600 score, you need to put 10% down. So that's pretty generous, actually, because Plaza, the other company that offers these, goes to a 620. So that's very good to know. And they do offer manual underwrites on that or automate underwriting as well. So very, very good there. Property types, 1 to 4 units. I know a lot of people don't realize that on VA loans, you can live in 1 unit and rent out the other 3. You can even use the rental income on those other properties to go towards your eligible income. So very good as well. VA approved condos are allowed as well. Manufactured housing is allowed as well. So it's a very flexible program, which is very good to know. And eligible, and this is pretty much everybody. Can't do demolished homes, can't do raised homes, can't do mixed use, can't do investment properties, because remember, this is for living in the home, and can't do mobile homes either. So there you go. Make sure to follow those guidelines. Homes that have not been completed are not eligible for VA renovation. Construction must be complete with documented evidence. That's a pretty standard VA guideline. I don't know anybody that will allow any of these types of homes to be done. And here's what they are looking for: eliminate health and safety issues, connecting water and public sewage, and eliminating obsolescence, mold remediation, repairing roofing, siding gutters and downspouts. If I can talk, works even better, right? Making energy conservation, installing fences, driveways, walkways, installing fridges, countertops, fixing lead-based paint. All those kind of things are eligible. Big things ineligible. I'll put this in bold print here so we can see it. structural modifications, oil tanks, luxury improvements, landscaping, moving into a different location, anything that takes more than 6 months. And here is one difference between them and Plaza specifically is Plaza has a 4-month limit, EPM is 6. So if you're going to go over 4 months, we'll definitely have to get EPM on that one. Here is one that's in common with both EPM and Plaza, and I think it's pretty standard. And it's a huge one, is any repair that prevents the borrower from occupying the property for more than 16 days during the renovation period. In other words, you can't be kicked out of the house for more than 2 weeks during the renovation period for your repairs. So it has to be non-structural, and the house has to still be safe to live in during that renovation period. The other big one for any sort of renovation loan, whether it's VA or conventional or FHA, is no self-help. And that's a big one. I get a lot of calls on that because people, these weekend warrior contractors are like, oh, I want to put in my own roof and my own siding. No, you need actual general contractors. Now, the only exception to that is, something really minor like painting. You might be able to get away with that. But anything other than that, no, you just can't do it on any sort of renovation program. Oftentimes, they won't even allow you if you're a licensed contractor yourself, which kind of sucks, but that's the rules. Ineligible is pretty standard for any lender you use. Can't put in swimming pools, bath houses, tennis courts, hot tubs, barbecue pits, tree surgery, satellite dishes, manual mirrors, gazebos. Anything requires more than 3 draws. Basically, a draw is where they pull the money out. Anything that requires architectural plan, you just can't do those on these products. Now, that being said, if you want to do that kind of stuff, you can look into the 203K product, which is the FHA program, or the home style program, which is the conventional program. They are much more flexible on this kind of stuff, and I have that stuff as well. So hit me if you need help with that. Time period must begin within 30 days. That's pretty standard. I think Plaza is actually 15 days on theirs. And you can't pause the work more than 30 days or you're considered out of compliance. So keep that in mind as well. And must be shown to be finished within the work period. Again, EPM says 6 months. Plaza says 4. So you can't extend this thing out months and months and months at a time, or you're going to be out of compliance and get in trouble. For EPM specifically, if you are going over 50,000, they require a HUD consultant. Plaza doesn't even let you go over 50 on the general guidelines, so keep that in mind as well. About contractors, you can't be working for the business that's contracted the loan. It has to be a non-conflict, and this is really any renovation loan, by the way, because they don't want funny business going on, side deals going on. So you can't work for the contractor, period, end of story. And I've seen that where, well, my dad's going to renovate my house. Nope, still can't do it. And that's really any renovation product has these guidelines, not just EPM. Permits one general contractor. You must have written agreements. Obtaining more than one bid is recommended, not required. You got to carry insurance, which is helpful. Must follow up. Must pass permit inspections. Must have detailed estimates, that kind of thing. There are some contractor estimates. Here are some samples. And once you get started with me, I can send you a copy of these. They are very, very picky about these estimates. And so make sure to use the templates. And if the contractor wants to use their own template, too bad, because you have to use the templates that I sent you. Well, if you want to get the loan, that would be helpful. There's some unacceptable things: missing property address, missing name of the contractor, missing name of the business, missing dates, missing details for each repair item, missing itemization, missing signatures, missing things that are not structural in nature. In other words, you can't be doing structural changes to the house. About appraisals. So the appraiser is going to use what's called an after improved value to basically determine hypothetically what the house will be worth once the improvement is done, and must notify of any health or safety issues that are not addressed in the proposal. And the appraiser will review your cost per hectare estimate and put that in the appraisal report. They will note any repairs that are outside the scope, and so they might request you to change the proposal. By the way, the great use of the VA renovation loan is if you know that there are repairs needed to make the property VA eligible to get that VA renovation loan in advance. So it's a great use of this program, by the way. Value must be 100% of as-is value plus renovation cost. And they will use the lower of the two. So if the after repaired value is actually more than the cost or less than the cost of renovation, it's considered a short appraisal. We'll go through that in a second as well. How our cost of repair is determined. They take the cost of construction out of contingency reserve, have your 5 draws maximum of $350 each. You got to get some title updates, some structural fees and permits, and of course the actual cost itself of the renovation. There is a maximum mortgage worksheet. I'll help you with that. You get some cost estimates. They will review that your contractor. Every lender does this, by the way. They'll let you use any contractor you want, but they will vet them to make sure they can afford to. The big one is they want to make sure the contractor has the funds and the experience to do that renovation loan. And they will have a team call. Everybody pretty much does these team calls to discuss the program guidelines, make sure everything works out. And then permit fees at closing, there are some rules about that, pretty standard. And then work must begin within 30 days of closing, ideally sooner. And you do need to occupy the property within 60 days per VA guidelines. And you can't not occupy just because construction is going on. You need to, like I said, the house needs to be able to be moved in within the 60 days of closing per VA guidelines. And you can't just be like, well, it's under construction, I'm going to stay 90 days out. No, you got to move in. And then once work is complete, you send them an email saying it's done for final inspection. Every lender has something similar. You have some waivers and things to be paid out. Resources. Common FAQs. What if the as-is value comes in under the contract price? Just as any standard transaction, they will use standard practice that if the appraisal is short, you need to bring remaining funds to closing. That's really any purchase. Can you purchase a HUD-owned property? You can, but it cannot be used in conjunction with any HUD programs. This is a VA program. VA benefits must be utilized. If you're doing like a HUD foreclosed home, you should go FHA 203K, which I have that program as well. Can you repair a roof? Yes. And then it's got some interesting info about permit fees. And then is it offered in all states? And EPM implies that they're in different states, but I'm licensed in a lot of different places. So either one of them, we can find a way to make it work. So here's a big one here. Structural changes. We'll zoom in on this one. Structural changes not permitted. Maximum minimum repair amount. There's no minimum on the repairs. $100,000 maximum on this program with EPM. Like I said, the other one, Plaza, is at 50. So a little difference there. Landscaping not permitted. 203K consultant required when it's over 50,000. Mortgage payments finance. You cannot finance the mortgage. So just like any standard mortgage, first payments can be due within 30 days of closing. You'll have 3 draws for the contractor. Initial draws, the contractor are not permitted on this, or an initial draw is basically where you pay them in advance of the work. And actually Plaza doesn't allow that either. I think this might be a VA guideline actually on that one, which can get tricky because, the contractor needs to go spend some money down at Home Depot getting all those materials. And so they need to have enough funds available to go buy those materials in advance. If that is an issue, we can look at 203K or the conventional product instead, because that definitely a non-negotiable on that one. Needs to be completed within 6 months. Like I said, APM is 6. APM is 6. Plaza is 4 on that one. And that's pretty much it here. So I hope you enjoyed this brief presentation with info about renovation loans. As always, if you have any questions or comments or concerns, feel free to call me at 937-572-3713. I also reach at Scarpero.com. I am licensed in 10 states. I keep adding new ones. I'm licensed in 10 states and then through Edge Home Finance, where I work, I have access to about 40 states. If you have a prospect outside of those areas, I can still help you. Got contacts all over the country. So please, any questions, comments, concerns, let me know. Let me know I can help you. Talk to you soon. Bye.